So this is the euro dollar analysis for Wednesday the 18th of October. Now let's look what's happened on today the 17th. Well, we've had prices come down. Ideally I would like to see prices either hold the 1770 or proceed all the way down to say 1720. I'd like to see break below 1728, but we've gone as low as 1736 and we have seen some buying momentum come back into the market. So I'm just going to have a look at the higher time frames before coming back down to the execution time frame. So on the monthly chart, we've had a strong run up in prices. We have stalled in around the 120 region, and we did last month. We did close bearish after trading all the way up to 121, and this month we're currently putting in a doji at the moment, as we have been bought back up from the lows. So let's just have a look at the weekly time frame, see where we are. On the weekly, we've found some support on a couple of occasions on this blue moving average here, which is a 200 period moving average. We are now having the 200 and the 20 period moving average pretty much converging on one another, and they're both currently at 1690 and 1673. So about 117 seems to be an area where I'd likely see some buying. On the daily chart, again, we do look a bit more bearish on the daily chart, because over here on the 2nd of August, we did see we had a bit of a pullback all the way down to the 117 below, all the way to the high 116s. And again, we've come up to around the 1870 region, and we've had 4 consecutive days of selling so far. So prices do seem to be trending downwards towards the 117 level for another retest of that region, and a possible breakdown towards 1612 potentially. So we do appear bearish on the daily chart. So if I go back down to the, even though we are bullish on the monthly chart, so if we go down to the execution time from the hourly, we can see that we are testing the 1770 from underneath. Now, as we did not bounce from actual support, I'm just going to have to wait and see what happens here in around 1770, whether prices do break and hold above. If the prices do break and hold above 1770, a couple of retests from above, and a large candle, like say for example the candle which opened at 7 p.m. on the 17th, which was currently, let's see how much that was, 64 closed. No, I suppose you need to be bigger than that. No, it needs to be bigger than that. Yeah, so we have to see a large candle, possibly about 20 pips or so, close to it, form above the 1770 for us to look for potential longs above. We'll be looking at possible resistance in around the 200 period, and this moving at high time for moving average here in black. That would likely form some area of a bit of area of confluence with this 1788, just say 1790. If we do successfully navigate 1790 and 1810 and move up to 1830, would be the next likely where we might see some resistance. These horizontal levels marked here in blue are weekly pivots from a couple of weeks ago. They might provide resistance, but I do not place much emphasis on them as much as I do these areas marked out in red on the chart. There are areas where I look at, but I prefer to see prices reverse and react to 1830. So from above 1770 all the way up to 1830. I am a bit cautious in the 1790s and 1810s because it's a very small zone to take a look at. So ideally I'd like to see prices trade above 1770, and I'll be targeting 1830 to the upside. Now, if we do not hold above, if we do not trade above and hold above 1770, I'll be looking for prices to break down. Prices break down, I'll be looking for prices to come all the way down to 1710. I would like to see the reaction there. I did mention on the weekly chart, the 20 period and the 200 period moving average, they're currently contracting, and the gaps between the two of them is closing. So the gaps below are currently, let's see where they both are. They both are at 200 periods at 1690, and the 20 periods at 1673. So they're about 17 pips away from one another. Yep, they're about 17 pips away from one another. So we're going to see how prices react there, whether we do find support, another bounce to the frame. I would be, even though this does appear to be a bull flag forming here, ideally, I'd probably say the prices are the fact that we have not seen prices recover for some time now to head up to retest the 119 level and eventually the 120. I would be expecting prices to break down, but we have to see how prices react to the levels outlined. So that should wrap up euro dollar analysis for, let's just get it all back down, for the 18th, Wednesday the 18th of October. So even though we are, so just to summarize, even though we are putting in what appears to be a bull flag for a continuation to the upside, I think the likely move now is some prices heading up towards some form of resistance and breaking down to retest the 117 level. So before I go, LCS, like, comment, subscribe. Thanks for watching.